Hey there, Stephen Wong with Avon Investments. Thanks for joining me today. I'll be answering some of your questions. They've been questions that I've been getting from current investors, potential investors, and also emailed questions from the mailing list. And I just wanted to take the time to address them in a video format. So the first question comes from Simon, and question number one is, why refinance a property when you can sell? So there are many different exit strategies that you can use when you're investing in real estate. I just want to take a look at two, which would be selling and refinancing. So we'll compare and contrast those two.
Let's look at point number one. What are the tax advantages of refinancing a property versus selling a property? One of the best advantages about refinancing a property is that you do not have to pay taxes on the money that you get out of the refinance. Let me prove it to you. Let's say you bought a new car and you took out a $30,000 loan. Do you have to add that $30,000 onto the $70,000 you made as an engineer this year? Therefore, you have to pay taxes on $100,000? No, that would just be absurd. You don't have to pay taxes on money that you get from a loan. Therefore, you don't have to pay taxes on money that you get from a refinance. Now, you do have to pay taxes when you sell a property because you have what's called a capital gain. So let's just take a look really quickly at an example that will illustrate the difference between these two. Let's say that 5 years ago, you bought a property for $500,000. You put the typical 20% down for an investment property, which is $100,000, which leaves you with $400,000 in mortgage debt. Now today, 5 years later, the property is worth $580,000, and you had tenants in the whole time that have been paying your mortgage. They've paid off roughly $50,000 of that mortgage debt, so you're left with only $353,000 mortgage debt today. Now let's take a look at what happens when we sell the property. So because the property is worth $580,000, we're going to sell it for that, and we're going to need to subtract the original purchase price to figure out what the capital gain is. So we subtract $500,000 and we get roughly $80,000. Now that's your capital gain, but of course in Canada only 50% is taxable, so that is now the taxable amount. Now with refinancing, we already know that we're not going to pay any taxes. But let's take a look at the numbers anyway, just so we can understand them better. So the bank will loan us 80% of the new value of the property. So we take 80% and we multiply that by 580,000, which gives us $463,000. That is what they will loan us in a new mortgage. Of course, we have to pay off the old debt of $353,000. So once we do that, we're left with cash in hand from the refinance of $110,000. And that is what allows us to go and buy a new property. Now it's important to note that we're still left with $463,000 of new mortgage debt.
So there's definite tax advantages in refinancing because you don't have to pay the capital gains tax because you're not selling. Now point number two is cash flow. So what are the cash flow advantages of refinancing? The cash flow advantages of refinancing is basically this. You get to keep the original property that was making you cash flow in the first place. You pull up the $100,000, you use that as a down payment on a second property, you rent that one out, now you have double the cash flow, and you get to control two properties with the same amount of capital or the same amount of money that you have, and you own more assets. So that is, in the long term, much better because what we're basically looking to do in real estate investing is to increase the cash flow from our portfolio so that we can enjoy a supplementary income or a good retirement income and just live off of that. So I hope that answers your question, Simon. Question number two is one that I get all the time, and it's a little bit less of a question, but a lot of people are concerned because they have a family member, mom or dad, or Auntie Shirley, or Uncle Bob that says, hey, refinancing is really, really bad. It's really bad. But you and I both know that the world isn't black and white like that. So how could it be bad? Well, if you refinance your house and then use it to buy a boat, a vacation, a new car, or even home renos sometimes, those things for the most part will never be worth more than what you paid for them. They're liabilities and they don't produce cash flow. So if you're leveraging yourself, getting into leveraging just means getting into more debt. If you're getting into more debt or leveraging yourself to buy liabilities, I think that's a bad decision. However, if you already had a rental property and you're taking money out of that rental property and you're buying another rental property that's also cash flowing, now you have twice the cash flow and you own two assets. I think leveraging to buy assets makes total sense. So hopefully that answers those two questions. I have some announcements to make. Carrie and I went on a nice vacation to Mexico. Hopefully I'm a little bit more tan than I was then. It was beautiful. We got to go swim with sea turtles. We got to go see Chichen Itza. It was amazing. Really enjoyed it. I know a lot of you guys are animal lovers, so I'm going to try to post on the end of this video or as a separate thing, just a little clip of some sea turtles and us swimming with them for you. The last announcement I have to make has to do with the next video. So, me and my team member, Atif, my realtor, have been working really, really hard on getting some information about condo inventories that is not available anywhere else. So stay tuned for that. I think that information, as well as our analysis on how the condo inventories will impact the pricing in Calgary of condos, as well as whether it makes sense to buy a condo, whether it be for a house or an investment. I think that'll be some important information for everybody to know, especially those of you that I know own condos as investments. So stay tuned for that. That'll be coming up very shortly. Thanks for your time and have a great week.